Happy Thursday. We're halfway through the month of August. I know in the South, school's already started. For us, school is in a couple weeks, so we're getting to that time. I just came back from vacation. Last week I was in Florida. I am officially back in Wisconsin. And even though the weather was 80 degrees yesterday, I was like, oh, it's nice and cool. Florida is hot. So this week, in case you didn't know, we are talking about a bit of the future of short-term plans because once again, legislation has changed for those keeping score. This is about the third time since the Affordable Care Act started that this has happened. I doubt it's going to be the last time. It's kind of a hot topic, and there's pros and cons to it, and there's reasons behind one theory, and there's reasons behind the other. So who knows where it will eventually land. So we're going to talk about that from Pivot. As far as we know, they're the only ones who have come up with a plan for next year, for 2025, where we have a short window. So that's why I asked Pivot to come on. But today we have Letty from Pivot, and I have talked to Letty numerous times. She is, well, I would say friend. We've hugged. We've actually physically met and hugged. She's been to the North American conference, but has been to our office. So
Yeah,
I'm so excited that you're on, Letty.
thank you
So
so
I'm
much.
going to ask you a couple questions.
Sure.
How long have you been in insurance? I mean, how long have you been doing
Oh,
insurance?
all right, Chris. Now you're going to make me age myself. So
Hey, I
I
did too, so there you go.
I have been in specifically the short-term industry for 24 and a half years. I
So you've
spent
seen it all, right? You've seen all these
oh,
changes.
the involvement of short-term medical has been amazing because back in the day, it was really a catastrophic type of coverage. Didn't have all the wellness or, preventive benefits as they do today. Saw them be reduced down to 90-day durations. And here we go again with yet another change. So yes, I spent 19 years of my career with IHC.
Sure.
And I have been a broker account executive here for Pivot Health for the last 5 years.
And it's been great. I mean, I don't know. I know there was for a while four major players in the short term:
Mhm.
IHC, United, Pivot, and
All
Allstate,
state,
which used to
not
be
Jen,
NatGen.
right?
And now IHC's kind of disappeared, or at least maybe they're still around, but I just don't see them in the
So
short term world, right?
no, so IAIC, IAC, their paper discontinued short-term medical. So
Right.
as of 2023, they no longer offer short-term.
Right.
So they offer pivots short-term plans,
Oh,
ironically.
that's funny.
Yeah, and
Good.
UHC on their cloud. So yeah, they are no longer in the short-term
Right.
industry on their own paper.
And I do know there's individual states where some carriers might offer one. We had one, Arise. It was only here in Wisconsin. So there might be some of you might be going, well, they're in my state. I have,
Mm,
something that's fine. But for the most part, those are the three national players in the realm of short term.
yeah.
So we just had a huge change effective as of the end of this month. September 1st is if you sold no short term, this isn't anything you're like, okay, whatever. But if you've been selling it and you're trying to figure out, oh no, because there are places for it. That's part of the
Hmm.
problem. CMS doesn't really understand the place of it. And some of it is some of them understand it, but there's been some very bad agents who have sold it for what it's not. They have not explained what it is, Oh, you're pregnant, sure. Oh, you've got cancer, sure. Like they've done some
Right.
really bad, right? And so
Yeah.
CMS, kind of they typically do this. It's baby with bathwater out. So they've just, but they didn't get rid of it all. They said we can have it for 3 months and a 1 month extension. So we can basically have it for 4 months. And in states, Washington State, is it Oregon? There's a few that Massachusetts, they've only allowed it for 3 months anyway. So for them, this isn't anything new. This is how it's been since the beginning of the Affordable Care Act for those particular states. So Letty, tell us, how is Pivot? Show us what's Pivot going to do to try and, until it changes again, right?
Yeah, and that's what we're hoping for, that it does change again. Do you want me to start sharing my
Yeah.
screen and
So
go
share
through the
your screen.
presentation? Absolutely. So let me go here. Let's make sure I got the right screen. All right. Can you see my screen?
Yep.
Okay, perfect. So I've introduced myself. Well, I should say Kris introduced me. Thank you so much. I appreciate that. Let me hide this so I can don't get distracted by that. So a little bit of background just for those of you who have not sold Pivot Health. I know Kris and her team have been selling Pivot, and we appreciate the business. Just a little bit of background. So Pivot Health is actually a product development, marketing, and management company. So Pivot Health is not a carrier. We do not insure plans. So we design plans, bring them to market, and then we have carriers that actually insure the plans for us. So that is, and I'm kind of prefacing the presentation with the background of who Pivot Health is, so you'll better understand how we are going to be able to position ourselves with the upcoming changes. The other thing is that we don't want your clients going into a provider or a facility saying, I have Pivot Health insurance, because what's going to happen? The first thing the provider office or that person checking in or billing department is going to say, oh, we don't have a contract. We don't work with Pivot Health. We've never heard of them. That's because we're not a carrier. So we were founded back in 2015. As I mentioned, I've been with the company for 5 years. And in 2018, we were acquired by healthcare.com, which is an inshore lead tech company, just so that you understand why. You'll see my email domain is healthcare.com, and you'll see our logo will always include the healthcare.com logo in there. So when you get contracted with the with Pivot Health, you will see in our in your agent portal, our proprietary product suite. So it is going to be short-term medical, which is of course our niche product. That's what we're known for. Then you're going to have our dental and vision product that's available as a check the box when selling short-term, or as a standalone product. And then we currently offer a supplemental product, and this is only going to be available as a check the box when you're selling a short-term medical plan. The nice thing is once you've sold that Latitude plan, the client can keep it until they turn 65. It doesn't go away when the short-term medical plan expires. It is a separate policy. So as Kris mentioned, we're one of, proud to say, because we are a young company, but just so you know, the founders of Pivot Health, I've worked with for many years. They have a lot of experience in this industry, hence why we have become one of the main players in the market. So what makes Pivot Health short-term medical products unique? You're going to see when you go into your Pivot portal, a lot of different plan options. Some agents say it's a little overwhelming, too many options, too many choices. But we assure you that you're bound to find something that'll fit your client's needs and budgets. Extended durations. Sadly enough, these extended durations are only going to be out there until August 30th to offer. So these extended duration essentially means that a client can sign up with multiple duration coverages at the onset and not have to reapply in between each coverage period. So what's important about that? So our plans are simplified underwriting. So they do have to qualify. These are not guaranteed issue plans. And like Kris mentioned, yes, if they've been diagnosed with a cancer, they're not eligible. If they are currently pregnant, they are not eligible. So again, these products have a certain niche that they fit into. This is not for everyone. So you want to make sure that the client understands what they're purchasing and exactly what benefits they're going to get on these. So these are really designed for those healthier people that don't have coverage through an employer or it's any type of a group coverage. And if they don't qualify for a subsidy or a large enough subsidy, an ACA plan can be really expensive. So you just want to make sure that you're talking to the right type of client when you suggest a short-term medical plan. So with these extended durations, there's no additional underwriting, no new pre-ex look back, there's no new waiting periods, because yes, there are going to be some waiting periods depending on the plan and what they're trying to use the benefits for. Benefits all reset So each new coverage period is a new policy, new ID number, deductibles reset, co-insurances reset, max out-of-pockets reset, and so does the benefit maximum of the plan. Little different than some of our competitors. So our benefit maximum is per coverage period. It is not a lifetime maximum. So, and the nice thing is also, if they develop a condition while on the plan, these extended duration plans, that condition will continue to be covered in the subsequent policies. We can't deem it as a pre-existing, and we can't exclude it from their coverage. And we also cannot cancel out their subsequent policies. We have now been invested, they are on the plans, and we have to continue to cover them. So let's say, for example, they're on a 3x364-day coverage and they develop a cancer 6 months, 8 months into their first coverage period, and their maximum coverage was $1 million on that policy. Come policy 2, probably they're still going under treatment and who knows, surgeries, etc. Well, that cancer is going to continue to be covered. Of course, they do have to satisfy their max out-of-pockets before the plan kicks in at 100%, but their $1 million total coverage also has reset. So they have another $1 million, even if they used up, 400,000 or 500,000 on the first policy. With our extended duration plans, the commissions are level. We don't treat them as a renewal. They are treated as a new policy, and premiums are going to be locked in for any of our companion life plans. So North River, that underwrites our Epic plans, they will have a trend increase, just so you know. As I was mentioning to Kris, how years ago, short-term medical plans were really designed for catastrophic coverage. They now include preventive and wellness on all of the plans. We have plans that use national networks, but Pivot is known for our open access plans. So that means that the clients have the freedom to go to any doctor or any facility. With these plans, we use reference-based pricing, which I'll explain for those of you who are not familiar with that. Again, simplified underwriting. Unlike our competitors, we do not go and do any type of MIBs or prescription history after the application is submitted to determine whether or not the client is going to be eligible for coverage. Our eligibility is based solely on how they can answer the application questions. So they have to be able to answer no to all the application questions in order to be eligible for the coverage. There's no rate-ups on the Pivot plan, so we don't ask a tobacco use question. We also do not include a height and weight chart, so their only limitation is going to be weight. So if a female cannot be over 250 pounds, a male cannot be over 300 pounds to be eligible. We accept controlled hypertension, controlled diabetes by diet and exercise only. So yes, any type of insulin or medication for diabetes treatment is going to be a decline.
So if somebody says they're pre-diabetes, it usually means they're still on diet and exercise. They're not taking the medications. They can go on Pivot.
That's correct. Yes.
Because other carriers, if it says pre-diabetic, they will not take them.
Right. That's how we, and we did take type 2 diabetics up till about 2 years ago,
Right.
but they eliminated that. So I've got agents calling in all the time. So my client is on Ozempic, which is known to be, it's a diabetes medication, but everyone knows people are using it for weight loss. So I stress to them, so long as there is nothing in their medical records that shows that it was prescribed for diabetes treatment, they would be eligible. Also, we do not require social security numbers. So yes, clients do not have to be a US citizen. They don't need any type of documentation. The North River and companion plans only require that the client have resided in the US for the prior 4 months to the application date in order to be eligible. And of course, they still have to be able to answer all the application questions with a no. The newest plan that we added onto the portfolio, our Shore Care, which is underwritten by Pan American, does require a 12-month residency in order to be eligible. For the open access plans, you're not going to have a PPO link to you. You look up your client's doctor or facility that they're accustomed to using, because these plans have no networks. So with these open access plans, we have partnered with a patient advocacy service. It's called Point Health. This benefit is included, this service, in your client's open access plan, no charge to them. They can call, give their zip code, their short-term medical application ID, and the services that they're looking for. Point Health can help them locate a provider that'll work best with the plan. They also offer bill negotiation services, and that's going to be for those larger out-of-pocket expenses if the client is having trouble paying those bills that they're responsible for. And Pivot is known for designing products for certain niche markets. So we stand out different from our competitors because we cover student athletes. So high school and college athletes are covered on our plans, and any injuries while playing in the sport or practicing would be a covered injury. We do child-only policies. Our child-only go down as young as 6 months of age. That's for our companion and our North River plans. On the short care plans, they do require that the child be at least 12 months of age. Now, if you have children under that minimum child-only age, they are able to have coverage, but they would need to be included with an adult on the plan. And still till today, our largest market segment is that pre-Medicare market, 60 to 64 and 11 months of age, because that age band is very expensive if they are trying to find an individual major medical plan, especially if they are not qualifying for a subsidy or a large enough subsidy to make a difference on their monthly premium. All of our plans include free and unlimited telemedicine. I mentioned this, and you want to make sure your client understands. If they're being price conscious on the monthly premium on the plan that they're selecting, of course, the plans that include those office visit copays for sick visits, those plans are going to be a little bit higher priced for that benefit. So if they select a plan that does not include office visit copays, remind them that they have that free and unlimited telemedicine. So that's a big factor. All of the plans are backed by A-rated carriers. Even our new plan, the short care underwritten by Pan American that we just added to the portfolio.
And so the extended duration, just so everybody knows, those ones that she had on there are vary by state. My state does not have the 364s. So your state may or may not have that, but you can only get those until the end of this month.
Correct.
So if you have short-term people right now, which is what we're doing, we're reaching out to all our people, because I got somebody who have been on short-term year after year after year, because it's what made sense for them, to come in and go, hey, maybe we need to get you on a plan to get you through next year. So this is your chance to do that if that's what makes sense for your clients.
Yep. And there's going to be some rules, how far out you can rewrite these clients. And I'll go over that when I go over the new rulings and how things are going to look after August 31st. So when you go into the portfolio, we've got a couple of different categories of short-term medical plans. And again, like Kris mentioned, not all plans are going to be available in all states. So, but the nice thing is the Pivot portal does do that screening for you. It will only display, once you put the zip code in, it'll only display plans that are available in that state, as well as the duration. So there's no guessing or trying to figure out, which plans you can offer them. Core plans, a light short-term medical plan. I'll go over that. It's also considered a passive PPO plan. So it has a network, but it's not restricted to the network. Classic plans, these are the all open access plans. These are going to be the ones that are offering the largest array of plan options for your clients. And they are all open access. There's going to be no networks at all for the classic plans. Epic plans, two different plan designs. One is going to be a true PPO. The other is going to be an open access plan. Rich in benefits, and I know Kris's team loves the Epic plans. Quantum Plans is a PPO plan using a Cigna network, and it is a true PPO plan. It is quite rich in benefits. Again, not available in states like Texas or Georgia. And I always mention that because those are two of our key states. And then the new plan that we just added, the Shore Care, this is underwritten by Pan American. This is only going to be available for 6 months. So it is not a mistake when you go to quote, even if you're looking for a longer duration, it is going to stop you at 180 days. It is an open access plan, and it does not include any prescription coverage on it. And essentially, we added this plan to the portfolio to have a third carrier to offer in our new design for the upcoming changes. So as I mentioned, the core plans, we call these a light short-term medical plan. Yes, they look very attractive with the low deductibles, low coinsurance out of pocket. But these plans, you have the Core 1000 will offer a discount card when it comes to prescription. Core 2000 does have prescription coverage with copays, no RX deductible to be satisfied. But keep in mind, any plan that I go over that has RX coverage with copays will have a limit on the RX benefits. So if they're on a 6-month plan, the RX benefits will max out at $1,000. If they are on a plan up to 364 days, their RX benefit will max out at $2,000. Of course, if they're on an extended duration, that resets with each new policy. Office visit copays. These apply to sick visits only. These are not for routine or wellness checkups. It is going to be limited to 3 visits per insured per coverage period, and it is combined. So it's not 3 in each category. So if they go to a primary doctor once because they weren't feeling well, that $30, that would be one $30 copay. If they went weeks later or months later to an urgent care because they weren't feeling well, that would be a $60 copay. That would have used up 2 of their 3 office visit copays for that term. And I did mention that these plans are considered a passive PPO, which means that they are able to use a First Health network provider. But if they do not, we're going to treat that claim as an open access plan, and we will use reference-based pricing. So the benefits are not going to change whether or not they use that First Health network provider. Now, the part that I want to make sure everyone is clear on, the core plans, the reason that we call them the light plans, the hospitalization benefits built into the plans are limited.
Yep.
So they have a maximum dollar amount that the plan will cover. So for example, if the client is confined to a hospital, after deductible and coinsurance is satisfied, the plan, the maximum benefit is $1,000 per day. That includes room and board, nursing services, and any miscellaneous charges. So let's say that bill comes in at $2,500 a day. Core plan is only going to cover the first $1,000. That other $1,500 is going to be the client's responsibility. So you want to make sure that the client is clear on that. And so for this reason, the majority of the clients we see on these plans is that younger age band, 25 and under, a lot of children only policies. Not to say that agents don't sell it to older age bands, but in those cases, most of the time, they stack it with a fixed benefit or an indemnity product that would have hospitalization benefits to help with that out-of-pocket exposure. So just making sure that everyone is clear on that. When it comes to the preventive examination on these core plans, it is going to cover up to $200 towards one wellness or routine visit. This is with a primary doctor. And the reason I specify that $200 only applies to that primary doctor because I've had clients, agents call and ask me, well, you know, what about a routine pediatric visit that the child is going to? Those are separate benefits. It would be subject to deductible and coinsurance. Same for a routine annual OBG exam for a female. I've had agents call me and say, well, that's my client's annual checkup. It is a separate benefit. So that $200 goes towards a primary, like an annual physical or routine checkup. The classic
The core
plans.
plans, just so if anybody have ever seen them, they're very inexpensive. I mean, if you send this to your clients, they're gonna go, "Oh, I want that one."
Yep.
It's inexpensive for a reason. It's extremely limited for hospital things for something major. So this is not one that I would recommend selling as a standalone. Like she said, with an indemnity, with a critical illness rider, surgery. I mean, you got to have something else. I mean, it's better than nothing,
Right.
maybe. So, if somebody needs it for 1 month because they're right between jobs, they turned 26, they got off their mom and dad's plan and their new insurance that their
Yeah.
new job's not starting till the next month. This one could be that type of plan,
Mhm.
but this is one to just be aware. It looks really great price wise, but there's a reason it's less expensive.
Yes. Yep. And just a testimonial, it was heartbreaking. I had an agent about a year and a half ago call me asking for me to help him review his clients' EOBs. Well, he sold the gentleman. The gentleman was about 58 years old. He sold him a core plan with nothing stacked on it. The gentleman had a massive heart attack. Was in the hospital, confined to the hospital for something like 20 something days. Of those days, about 10 or 12 were in ICU. The gentleman was on the hook for about $430,000.
Yeah.
And the EOBs were accurate. The
Yeah.
plan paid
The
1,000,
core, it's
1,000. Yeah.
inexpensive for a reason. I'm like,
Yeah, that should be a red flag when you see the pricing and it
they're
look,
like,
wow,
oh, it's
look at all
70
these.
bucks. Yeah. So yeah.
Exactly. So we're very careful on these, and these are, they're underwritten by Companion Life. So if you do sell it to that younger person and you do an extended duration, that very inexpensive benefit premium will be locked in for the durations that they have it for. So the classic plans, open access plans underwritten by Companion Life, no networks. No, there's not going to be a PPO network for anyone to look up a provider or a facility. These are open access plans. We use reference-based pricing. Again, because these are underwritten by Companion Life, if you do an extended duration before August 30th, they would have a rate lock. These plans have the largest array of plan options, as I mentioned. You see deductibles ranging from $1,000 all the way up to $10,000, maximum coverages from $100,000 up to $1 million. You do have two plans that offer those same office visit copays for those sick visits. That would be either a choice or a deluxe plan. All four plans do offer that preventive or wellness visit, again, for that primary doctor, not pediatric wellness, not an OBG visit. It will cover up to $200 towards that annual or routine checkup. If they are looking for that prescription coverage with the copays, you would want to offer them a standard or a deluxe. And just a reminder, there is a cap on those RX benefits, and those benefits are separate from the medical portion. So, and when we say accumulation of benefit for $1,000 for a 6-month policy, $2,000 for a 1-year policy, that is not an accumulation of copays. That is what the carrier is paying. So if you have a client that you're signing up on a policy for 364 days and they're telling you up front that they're taking a medication that's costing them $500 a month, do not sell them a plan, a short-term medical plan for RX benefits, because once the carrier pays out that $2,000, which if the medication is costing $500 a month, they're only going to get 4 fills and their RX benefits would have then expired.
And you would
So
have to
just
really question whether you should be selling them a short term if they have a
correct.
medication that's that expensive.
Exactly. Yep. I have agents that call me with a list of medications that they want to confirm that are on the formulary. And I'm like, well, this is probably not a good idea to
Yeah.
even be contemplating these, there with so many medications, there's so many, complications that could occur and that would really not benefit the client at the end.
Yep.
So, but these plans are very rich in benefits. Again, a lot of different options and a lot of good coverage, very different from years ago. The
So can
Epic
you go back real quick to the
Sure.
deductible and max out of pocket page?
Sure.
Can you clarify, next one over?
Yep, there you go.
Yep. So on all of these, so we got the choice. It's got somebody picks the $5,000 deductible, 30% coinsurance, and the 11,000 out of pocket. Is it 5,000 and then 20% for until they pay another 11,000, or is the out of pocket including the deductible?
So we have updated the site. Years ago, it was not included. So these are now showing including the
Okay.
deductible. So for example, on a choice plan, the coinsurance max out of pocket is 10,000. So the reason why you're seeing 11, 12, 15, and 20, it is taking into account each of the deductible options.
Okay, so the max out of pocket that it's showing 12,000, if that's what they pick, it is a true 12,000.
Correct. That would be
Okay.
a $2,000 deductible plus the coinsurance for a max
sense.
out of pocket of 12. Yep.
Okay. All right.
Yeah. So we struggled because when I first started, the site did not include it, nor did the brochure. And it
Right.
was very confusing because that dollar amount was listed under the max out of pocket, but it was not including the deductible. So that really was not truly the max out of pocket.
Correct. Which
Yeah.
is a lot of short term. You weren't the only one. I would be like,
Exactly.
wait, there's another 10,000 on top of this. So
Yeah.
okay. But that,
Yep.
as long as it's listed that way, all right, perfect.
Yes. Yep. And so the Epic plans, underwritten by North River Insurance Company. So these are going to have two different plan designs. The Epic PPO uses a Cigna network, true PPO plan, and hence why you're seeing the middle column is showing how if they sign up for an Epic PPO plan and they go out of network, how their benefits will either reduce or they will lose some benefits. So you want to make sure that they're clear before they sign up on that plan. Epic Base, although underwritten by the same carrier, this one has nothing to do with the Cigna network. It is an open access plan. We will use reference-based pricing. These plans are very attractive because just what Kris and I were just discussing about that max out of pocket, well, guess what? Epic plans don't have a coinsurance. So their max out of pocket is whatever deductible they have selected. So easy for the client to understand.
Yep.
Yep. Max
Sell the
benefits.
Epic base 5,000 all the time. We tell them it's 5,000 and then you're done. There's no
Yep.
co-insurance. It's the Epic base is one of the easiest products I've ever had to sell for short term.
Yep, absolutely. So the max benefits you can offer on these is either going to be a 500,000 or $1 million total coverage. They do offer the wellness benefit for that preventive examination. Again, just a primary doctor routine wellness. There is going to be a 3-month waiting period to use this plan, this benefit. And it is going to cover up to $100 towards that wellness or preventive visit. Couple of different options when you're selling the Epic plans, both the Epic PPO and the Epic base. You are going to see that you'll be able to offer a supplemental accident rider. They can pick a $5,000 or a $10,000 benefit, and that is going to cover any expenses incurred if the insured is injured in a covered accident and requires medical attention within 72 hours. So great benefit to have. Make sure it's checked at the time of enrollment or unchecked. We cannot add or remove it once the application's been submitted. If it's done incorrectly, we would have to cancel that policy and you'd have to rewrite them.
And
Also,
we quote them, just so everybody knows, we just quote it with the rider on there. We take the Epic base, the Epic whatever. We put the accident rider because the money makes no sense for somebody not to have it. And then I tell them this is what it will cost you. And I don't think we've ever had one or two people who ever said I don't want that.
Right.
Because it's a $5,000 accident policy that's gonna pay their $5,000 deductible.
Correct.
Done. So
it's
for
pretty
like
simple.
$12. I mean,
Yeah.
it's very affordable, and I just include it when I'm quoting how much a short term is going to cost.
Yeah, great tactic. And make sure they understand that that rider does go away. So when the short-term medical plan expires, it is not a standalone rider. So once the short-term goes away, that benefit is also gone. It is tied into that short-term policy. When it comes to the prescription, works the same way as I mentioned. You would have to offer the Epic plan on your portal that includes the RX benefits. If you You cannot add it on or remove it after the application's been submitted. So you'll be wondering why you're seeing Epic listed twice when you go to quote. First option does not include RX benefits with the copays. Second option will. And just again, the Epic PPO uses that Cigna network. Do not let your clients go to a doctor or call in and tell them that they now have Cigna insurance, because if they do that, the provider or facility is going to go into the Cigna insurance system, look them up and say they have no coverage. We only have the contract to use the network. Epic Base, open access. We're going to use the reference-based pricing. So reference-based pricing, essentially it is how Pivot pays claims for any of our open access plans. So that's going to be your classic, that Epic Base, core plans, because keep in mind the core plans I said is a passive PPO. They can use a First Health Network provider, but they're not limited to it. And then the new Shore Care plan is also open access. So essentially we pay claims based on Medicare allowable or usual and customary. So for a provider, we will pay up to 125% of Medicare allowable for that covered service. For a facility, we'll pay up to 150% of Medicare allowable or usual and customary for that covered service. On average, the savings is much higher than even with the PPO plans. It's about a 69% savings. And make sure that the client understands, because most consumers believe that PPOs are the best way to go and that's going to be their best pricing. These plans come with balance bill protection, which means if they get a balance bill from the provider or the facility, because of the discount that we took off of their claim, they have the right to send that into us and we're going to settle out that bill on behalf of the client. They're not going to be responsible for it. And just little statistics, over 98% of our claims are filed through reference-based pricing. And annually, we only have to settle out about 1% of those balance bills.
So statistically speaking, it makes sense for them to do this. So, and we've had at least one, if not two of our clients that this happened to. They got balance billed. I mean, it was a huge thing, and we have a network who we hate because they like to balance bill everybody. And it took about 3 months, but that was it. The bill was gone because as soon as your client calls you or you tell them, I tell them, hey, there is no balance billing. So if you get charged, because like I said, we sell that 5,000 and they're out of pocket. I go, you pay 5,000. If it's beyond 5,000, instantly call Pivot. You get a client service, which their customer service is amazing, by the way. They're very fast. They're quick. I love them. I said, you email them right away. You contact them right away, and they're going to get on that bounce bill because you are not going to pay that. And it's worked. So it may take longer. I think somebody, the client service, like, oh, 60 days. And I'm like, yeah, it's going to take longer because I know my network. But it was still, it was handled, and because this is always the scary part. And I know a lot of people that's on that talk to me, I'm like, oh my goodness, what if it doesn't happen? And okay, it did. Because you don't want to put, I mean, you guys are like me, you don't want to put your client in a spot where they're going to end up with $20,000 out of pocket. It's just, you just don't want that, right? So the balance bill thing does work.
100%. Yep. I was involved in one balance bill that was over $7,000 that was wiped clean. And I had another agent recently share with me, they had a $23,000 hospital bill taken care of with balance bill protection. So it definitely works. And just keep in mind, right, with the open access plans, they are going to have that patient advocacy service to use, because I know clients are going to call and ask, how do I look up my provider and see if they're going to take my open access plan? Let Point Health help them navigate and find providers and facilities that'll work with them, also help negotiate large out-of-pocket bills that they are struggling to pay. You're going to notice that the open access plans are going to be priced a little bit more competitively. That is because there's no provider access fee. What clients don't understand is when they use a network plan, we get charged an access fee to use their network. That gets passed on to them in their premium. So just a little, stuff you can educate them on so they understand that they're not always getting the best deal because they're using a network. And there is no negotiating with networks.
Right.
We have accepted and agreed to use their pricing. So it is what it is, basically. That Cigna network, again, available on the Epic PPO plan. And also that quantum plan I'm going to go over. That First Health Network, again, is as an option on the core plans, but the core plans light plan, remember, hospitalization limitations. Be very careful when offering that product.
So Johnny's got a question.
Sure.
You have to unmute yourself.
I'm sorry. How y'all doing? I just got here just a few minutes ago because I had an appointment with another client. But I was wondering, have y'all gone over the 12-month plan already?
Not yet. We're just about to get to that.
Oh, okay. I'm sorry.
Nope, you're good. So,
Okay.
and it's, well, you know, and this is recorded, so it will be out. But
Okay.
yeah, so we're about 15 minutes left, Letty.
Oh, yep. Going to try to speed it up here. So the quantum plans are underwritten by Companion Life. Again, Cigna network, just the network. It is not insured by Cigna. 2 plan options on here: Quantum PPO high deductible, Quantum PPO copay plan. With the copay plan, they get the 3 office visit copays for those sick visits. Both plans offer the 1 wellness or preventive benefit, up to $250 towards that wellness or preventive. If they select the PPO copay plan, that is going to also include the prescription coverage with the copays, again, with the limitations based on the duration. The nice thing about these quantum plans is they are going to have a max out of pocket of $10,000 that does include the plan deductible. These plans also include a supplemental accident benefit, not a rider that needs to be selected. It essentially works as the rider does with the Epic plans, except with the quantum, it is going to cover up to the plan deductible selected for any expenses incurred due to a covered injury if they needed medical attention within 72 hours. So great option, very rich in benefits. Oops, sorry. Short Care plan. This is the newest plan that we rolled out in April to add on to our portfolio. It is going to be a 6-month plan only. It is an open access plan. It does have unlimited doctor office visit copays. It does not include any prescription coverage, only a discount card. And again, there's going to be a few differences if you're selling it by itself. A child only has to be at least 12 months of age. A non-US citizen has to reside in the US for the last 12 months. Brilliant Dental is going to be that optional dental that you can add on to a short-term medical plan. It is insured by Renaissance. It is a PPO plan. You also have a dental tab that you can sell it standalone. The age eligibility for the dental is going to be 18 and up. 18 being the youngest as a standalone, or if you're selling a short term, if it's a child only policy, you're not going to have an option to add them on. If they are being included with an adult, they do have access to the Brilliant Dental and Vision. Vision is through Vision Care, and it is only available when you're selling the dental.
And I know you got the latitude gap, but we've only got about 10 minutes, Letty. So just skip all this and get to how the 12 months is going to work, because that's what we need to know what's happening.
Perfect. So new rules starting on September 1st. So the administration has narrowed down the durations of short-term medical plans to a 3-month. The way the law reads, it's 3 months plus a 1-month extension. So let's just call it a 4-month maximum duration. They are also limiting it to a 4-month coverage with each insurer or carrier within a 12-month period. So they can do a 4-month policy. They cannot reapply, even if they're healthy and can get through the application questions with the same carrier. They have to move to a separate carrier. They are also requiring us to have e-signatures by the client. There also, there's no new disclosures that need to be posted to make sure that the client understands that they are purchasing a short-term medical plan that is not ACA compliant. Now, so what does that mean for the consumer? Again, 4-month total duration per carrier. They are able to reapply, but of course they are going to have to go to a different carrier. This is going to be subject to the state availability, of course. So what are our client agents doing right now? Write the longest duration available in the state where you're offering it up until 8/30. So the last effective date would be 8/31 for the extended durations or the longest durations possible. That's with the companion life plans and the shore care, which would be the 6-month. North River is going to be different. North River is allowing effective dates further out, and I'll go over that. So anything sold with an effective date up to, on the companion life plans, up till 8/31 effective date, those plans are going to be grandfathered in. So they can keep that coverage with the hopes that they'll remain on their short-term medical plan until hopefully this ruling gets overturned and goes back to business as usual. So again, 8/30 will be the last day you can offer the current durations. Starting 8/31, the platform is going to change. So
this will be for every short-term company. So United, it's an 8/30 as of 9/1. It's going back to that 4-month, 3-month plus 1-month duration.
Exactly. So again, we just want to make sure that we can assist you with that. Of course, the Pivot platform has the 4-month durations that we're going to assume that they want the 4 months. They can cancel at any time, just like you can today. We have 3 carrier options to offer and quote and enroll on one platform. So it makes it easy for you to manage your clients. One-stop shop for the quoting and enrolling. Same commission schedule, same service, and I'm still going to be your account executive. But we're super excited about the 1-3-12 solution that we've come up with. So 1 enrollment for 3 carriers, 3 insurance coverage periods, 4 months each with 3 different carriers for a total of 12 months of coverage. So it's kind of going to look like our extended duration plans do today, but it's going to be 3 unique insurance carriers. The carrier sequence is going to be randomized every time you quote. The application is also going to have a question to make sure that they are not repeating the same carrier within a 12-month period. So they are getting 3 separate policies. So each policy will have a new ID number, all the benefits reset, but they're not going to have any new underwriting, so they don't have to worry about going through the application process and re-enrolling, even if they develop a condition that would make them ineligible to apply. They will continue to be covered with this setup with all 3 carriers. No new waiting periods, and again, no new applications, so no new pre-ex look back. Now, again, all the benefits are going to reset with each coverage period. Keep in mind that the plans are not going to be identical like extended durations are today. They buy 1 policy and it's the same exact coverage each coverage period. These are going to vary slightly. We have paired them up as close as possible. So you want to make sure that they see that. Also, they will see what the price is going to be for each term at the time of enrollment, because the prices are going to vary. Doesn't necessarily mean that each coverage period is going to be higher. It may reduce and then go back up. And again,
the time of the quote, you'll see what each of those 3 plans are going to cost, and it's locked in at that cost.
Correct.
Okay.
Yep. And then the Epic plans. So the North River, we opened this up on August 1st. So they are the only carrier that is allowing you to quote beyond September 1st, all the way through January 1st. So your client can enroll in that extended duration or that 12-month plan. They can do that now and go as far out as January. Now, keep in mind, they are going to be charged immediately at the time of enrollment, just like they do with our current policies. Now, this is going, that effective date, this is all going to change. Those extended durations will be gone when you go to quote on 8/31. So we have to act now. We do have a bonus program for those of you who are selling. There's a 10 application baseline. This is going to end on August 30th as well. New bonuses will start come September 1st. So stay tuned for that. On this flex benefits, I guess I'm going to run through this kind of quickly, just so you know, and you'll see this coming up here shortly. We have partnered with Flex Benefits, which is a supplemental indemnity product. Some key features on these plans, and you are going to be able to click a button here within the next 30 days on your pivot portal to take you to the enrollment platform for the Flex Benefits. There are going to be some packages that you can offer for certain type of consumers, but you of course can customize it and make it fit whatever your client's needs are. And of course, these plans, these benefits are made to match up with other plans. So you want to do this as a stackable plan with your short-term or an ACA or a Medicare plan or a small group. These are guaranteed issue plans. And the issue ages is 18 through 79. So this is why we're saying it can be paired with a Medicare plan. And also, the coverage will end when they turn 85. So you can sell it up to 79, but they can stay on the plan once enrolled to the age of 85. So these plans are going to include a accident insurance. There's also going to be a rider that's available. Of course, it's going to vary by state. There's also critical illness insurance. They are going to be pretty rich in benefits, and they are underwritten by Companion Life, which is an A-rated carrier. Here are some of the benefits that the indemnity riders will offer on the accident plan. And again, it is going to be available by certain states. So that'll be available to you once you go into the quoting portal. Here are some of the bundles, and just so you can get an idea of what the rates would look like in those age bands. And you'll have access to all of this here shortly. When you sign up for the Flex Benefits, they are going to get benefits through Communicating for America, which is an association. And they are going to have a virtual app available to you that you can even use for your pets.
And if you guys, I was just talking about AI right there. Bella Chatbot, AI technology built by psychologists specializing in anxiety and depression.
Yep.
So it's 24/7. If somebody, I mean, you know, we're kind of like, oh, what kind of an AI therapist is? But, you know, if you're, I don't know, you're in the hotel room somewhere and you can't reach somebody, it's 2 in the morning and you're having an anxiety attack, and this is what you can get for nothing, it's not going to hurt, you know, it's probably going to walk them through, take deep breath. I don't know, but it's kind of interesting how AI is being used, but it doesn't cost them anything. So
Right.
kind of interesting.
Absolutely. And the nice thing is, if you're working with Pivot, you're automatically going to be able to get access to this product. There will not be additional contracting, because Companion Life is one of our existing carriers already. So it was a great, easy fit. You will be getting emails letting you know how to log in. So just make sure you keep an eye out for that. And again, we are expecting within the next 30 days that you'll see a tab in your Pivot agent portal that'll take you right to the Flex Benefits platform. So just trying to make it as easy as possible, but we're super excited because we were looking for a nice indemnity product that would help pair up with the short-term medical plans to fill in those gaps.
So now short term, because that's why we did this. So if you're gonna go this route, you need to make sure it's the right thing for your client. They understand the risk. They're gonna get a 3-month, they're gonna get a policy for 4 months. They're gonna get another policy for 4 months, and they're gonna get another policy for 4 months. So they're gonna be covered for the entire year. But when they sign up, let's just say it's the $10,000 deductible and max out of pocket. So they're going to have 10,000 that they have to do in the first 4 months, and they reach it because I don't know, they get a critical illness. That resets. Their next policy will have another $10,000 and then another one 4 months later. So with these policies, you have to stack. You have to put a critical illness policy on here. Because once I fully expect that the marketplace is going to go back to somewhat business as usual, which was like 5 years ago, where there is not going to be an open SEP. You're going to have to show that they lost coverage in order to get it. Somebody can't come walking into your office in May saying, hey, I make, $75,000 a year and I don't have insurance and I'd like to get some. Oh, okay. Well, I can get you a short term. Well, I have cancer. Well, I can't get you any, short term. Right.
Right.
So they're like, well, now I can't get you because you're sick. But no, I'm healthy. All right, I'm going to get you in. And then they get sick in the middle of the year. They're not going to be able to go on the marketplace. So, right now it's kind of, Wild West and anybody can get on the marketplace. And there's lots of reasons that we've discussed in other earlier podcasts and stuff. But this could be perfect. You got somebody who's been on, because like I said, I have people who've been on short term for years. I flip flop them. They're with NatGen 1 year, and then they were with United Healthcare, and then they went with Pivot, and then they went back to you. I got some that have been on it for 7 years in a row, and they may not want to do any other alternative. They're like, this is fine. I've never even gone to the doctor. Okay, but you understand you're going to have 3 max out of pockets. Worst case scenario, you're going to have to reach that 3 times. So, 10, 20, 30,000. I want you to get a $50,000 cancer policy, critical illness policy. I want to put an accident on there. So just, if you're going to do these, don't, you have to, you ethically, in my opinion, you ethically have to offer alternative layering to protect them. So, if you don't, you're going to get more calls. You're going to end up with like the one person who signed up for a core benefit and had, $400,000 worth of bills because they didn't understand how this worked. So, we're already doing this. Like I said, this is August. We've contacted all of our short-term people and said, hey, if you wanted to do this again next year, you better reach out to us this year, because the only way we can do it for next year is right now. If you want to be with one carrier, but, look at the different, we don't know the prices yet. Those prices aren't going to show up how these bundles of 3 are going to work until September 1st, right? I think that's when it'll go live, right?
8/31.
8/31. So 8/31, we'll be able to see what it looks like.
Yep.
For September 1st.
Surprise.
Yeah. Nothing like last minute, but so just be aware, start kind of running scenarios in your head. How would this make sense? For us, a 24-year-old, the Epic was like perfect for them because it was $150 versus the marketplace where it was $365. It may still make sense with that 3 stack because they're so young, but somebody who's older, do they want that risk? So, as I've said before, clients aren't afraid of the negatives as long as you let them know what the possibilities could happen. Does anyone have any questions? I know we're right at the top of the hour and people got to get going. Anything specific on how short term? And I kind of feel like Pivot's, I don't know, hedging your bets that you're just got to get through a year or at least through 25 and hoping that the Pivot or the short term rules and regulations will go back. As far as I know, United Healthcare and Allstate are just doing the 4 months. So if somebody walks in and they're between jobs, they literally need it because they're at one job and going to a new job. They're just doing the 4 months, but Pivot is hoping, right, that the rules and regulations are going to change for 2020, either mid 25 or 2026, right?
Yep. And Kris, remember too that when they go into the quoting portal, they are going to have that 4-month option. Right. As well as the 12 months. So if it is that person, like you said, that just needs a couple of months to get them through, they can just purchase that one single duration with the one carrier and off they go. And then if it is someone that's looking for something a little bit longer, they'll have that 12-month option. And of course, that's going to vary by state based on where we have all 3 carriers available.
Yes.
To offer the bundle.
Again, when you log on and put your state, it'll automatically only allow you to do what you can do.
Yep.
Well, thank you very much. Letty's got her information there if you have questions. And just so you know, healthcare.com was created before healthcare.gov was ever thought of. So they just happen to have the perfect email. So I know some people are like, oh, they had healthcare.gov. What was it? Something they've been around. I can't even remember how long healthcare.gov's been around, but
Yeah.
longer than the Affordable Care Act. Talk about perfect marketing email by accident. So,
Yep.
but thank you very much, everyone. I will talk to you next week, and I hope you have a wonderful rest of the week.
Thank you, Kris.
Thanks, Letty.
Thank you.